Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Jeff Phillips, a veteran resource speculator, with us. A real expert, has been through a few cycles. I thought it'd be great to have you on, Jeff. And it's been a little bit of a panicky time here just recently, short term, with sort of the metals prices and and consequently some of the stock prices. So I thought now would be a great time to sort of have you on. You can talk to us a little bit about your experience as you've seen a few of these sort of cycles, where we're at in this one, and maybe talk a little bit about some of the companies that you like and are invested in. Does that sound all right?
Sounds excellent. Thank you for having me.
Hey, thank you. I know you're a busy guy, so I really appreciate you carving out some time for us. Maybe before we kind of get too much into it, if you wouldn't mind doing what we all hate to do, but would you mind talking about yourself a little bit and who you are, what your background is for some of my viewers who don't know who you are?
Yeah, basically, I've been in and out of the resource sector for probably going on 30 years now, which sounds horrible. Sound like my dad when I talk that way. But, yeah, I came into the business probably in the mid 90s, I guess. I had a marketing firm up in Santa Barbara, California, doing local businesses. Best friend of mine who I went to college with had come down to San Diego and was a broker for two partners, Rick Rule and Kim Bradford at the time. And he had asked Rick how you make a lot of money in the resource sector. And Rick said, start an investor relations firm and help these companies tell their story. So I sort of got sucked into that through my friend. I ended up joining as a partner and ran that firm in the 90s. And that's how I got, learned a little bit about the resource business. Again, my background was marketing, design. But, since then, I financed many companies. If I went into all this stuff, but we had a lot of success in the 90s. I did the original corporate profile for Silver Standard Resources, Bob Quartermain's
Yeah.
company, and a number of other companies, we were involved in at that time. And then was lucky enough to finance a company called Ultra Petroleum that ended up, people always talk about diamond fields, but I think Ultra Petroleum, from listing on the old Vancouver Stock Exchange to, 10, 12 years later, it hit $200 a share. It was again, I wasn't a shareholder at that point. I was young, but we did really well with that deal. And we founded a company called Pinnacle Energy, which from the date we founded it, and it was a bad episode of the show Landman. If you watch it, we staked everything. We were like, we didn't know exactly what we were doing. We knew it was a hot area. We were lucky enough to bring management in 6 months after we staked all this ground in Wyoming, and they took the company. And 3 years to the day after we listed it, we uplisted it to the big boards. It was bought by, I think it was Marathon Oil for about 18.50 a share. I retired after that, got back in the markets in '03 because I could see all these, my old clients were trading at pennies and they had real assets. And '03 to '07 was a great market. About that time, I decided that I would start doing private placements again. So I started doing that. Then I got sucked back into the business. So now I tend to write a large check for companies. I consult for companies, and a lot of people have known me over the years and know I'm a longer term investor, like to be shareholders in the deals I'm in. So a lot of recognizable names will come in if I'm participating in a big way in a financing.
Yeah, well, thanks for giving us a good rundown. I myself got into in that sort of '03 to '07. What a great market that was.
Yeah.
I was a young whippersnapper, and when the conference had come up, whoever was standing around, kind of like Rick Rule, you were one of them. I think you had the same haircut you got now.
I did. I did. Yeah, it's been that way for a while.
Yeah, and anyways, obviously your reputation, precedes you, but you're known as being a real connector. Like you like to help these companies sort of connect with the right people. You happen to know everybody, and then also you're also known as being somebody who likes to invest, and obviously you put your money where your mouth is. So you have a position. So, anyways. I thought as soon as you've been through a few cycles, now it might be a really good time to sort of get you on. And how does this cycle that we're currently in compare to some of those, I guess, the other sort of three cycles that you've already been through?
Yeah, to point out a couple things, you mentioned you came in the '03 to '07. I came in about 95 or 6 probably after the whatever recession happened in '92. I don't remember it because I was in college and it didn't affect the price of beer. So I was good to go. But the funny part is, when you come into a bull market like you did and like I did one market before you kind of think you found a broken slot machine because everything goes up. And similar to what happened from Beaver Creek last year to PDAC this year. You bought something that went up. Not a great way to come in the resource market. For your listeners, again, anything I say on this show is geared towards somebody that understands the junior resource market. If you've never been in it, it's the Wild West. It's high risk, huge upside and huge downside and cycles, and so be very careful. But yeah, so your question is this cycle, we really had again, you can do well in a bad market. So the last 13 years, the bull market ended, in my opinion, in 2011. It just got going again here last year after Beaver Creek. Doesn't mean you can't do really well. I'd financed Patriot Battery Metals at, I forget, 16, 17 cents a share. It went to $16. A major lithium discovery. Bravo Mining, 4 or 5 years ago, pre-IPO, it peaked over $5, and I think I financed it at 50 cents. So you can have good deals in a non-bull market. I actually prefer those markets because you can be picky, choosy. You don't have to rush. You get into this bull market, and again, we've had the first stage of it, and now we're in a lull, which is normal. What was your question again?
I guess we're sort of where do you think we are at in the cycle? But why don't I come at it from another way? As somebody who is known, like your phone probably rings off the hook with people that are doing private placements. You're known as being a guy that'll write a check and make a decision fairly quickly. But I call it the velocity of check writing. When we're in a market and everything's sort of going up, there's always another financing because typically the money's a little easier to come by. And we are forced to have to move quick. Like you were saying, you can't sort of be as picky. You can't sort of take your time. If your velocity of writing the check isn't fast enough, there's somebody else there to sort of take your place. So, I was feeling this earlier this year that the velocity of the check writing was getting pretty wild.
Yep.
There wasn't a lot of time, and financings were getting upsized pretty significantly, double in some cases on some of these things, and it seemed like a lot of money was sort of being raised. But what do you sort of say as somebody who's more ultimately kind of involved in this industry and writing some big checks yourself? What do you think in terms of where we're at in this sort of cycle compared to others?
This cycle is going to be different. Obviously, gold is something separate from your other metals. And it could be a whole show in itself. But we've underexplored for the metals we need, which is what always happens. You go through the prices are low, people aren't exploring, prices get higher, people start exploring and finding new assets. But what's different this time is the geopolitical, and again, I was involved in the first rare earth boom, which was, '09 to '11 when rare earth, and China's control of that came on. It was a huge market. I financed 3 of the 4 US listed companies at that time. That narrative, hasn't changed, but it took 13 years to come back around. And now you have the geopolitical, everything that's going on with, Russia and Ukraine, Iran, China, and, and this administration, and even the prior administration was starting to recognize that, we don't control a lot of the metals that we need to so there's two sides. You've had under exploration, and then again, you need to control the metals in friendly countries that can have access to. So I think this bull market is going to be around for a while. We're in a speed bump, I call them right now, which is normal. The only caveat, and I think you had asked me off air, is that every bull market I've seen always follows some sort of recession or financial crisis. The end of the bull market. So I think there'll be there's allocation of capital has gotten ridiculous in the tech world and other things right now. I think that deflates. I think in the short term that can affect your portfolio if you look at it on paper. But again, I'm investing for the longer time frame. So again, I think we're in early stages of a bull market, but it doesn't mean you can't watch your portfolio go down by 40% over a 3-6 month period. So.
And we're starting to see a little bit of that. I was looking at a few stocks that I sort of own, like Contango. That was like a $40 stock a couple months ago. It's like $20.
Yeah.
Looking at like Luca Mining, it's off pretty significantly. Looking at one that we're going to talk about, Daura, that's off a little bit. So I guess it's a escalator up and an elevator down on some of these things when the metal prices start to
Right.
correct a
If you
little.
know what you own though, and you own a real asset, again, it's that's what junior resource investing is. I mean, I think I can't remember Rick's story. I've heard Rick Rule's story for years, but it's like if you go and buy tuna at the supermarket and you find out next week, and you love tuna, and you find out next week it's half price, you don't not buy more tuna, you go buy more tuna. So, the resource market's kind of the same thing, right? If you really like the company, and what they're doing, and they come down, and I've got several of those companies that I'm actually buying right now, and I'm a large shareholder because they've come down, and I think they offer an attractive entry point. They're on sale.
Well, you mentioned something, you have to own something real, know what you own. What are some screens that you kind of look for? How, like there are a lot of companies out there which are probably not worth anybody's investment or time. What are some of the screens that you kind of look for in your own process?
Yeah, well, 80% of the companies, again, are going to be aren't investable to me. Doesn't mean they don't go up, they don't double, triple, good market, but I want to be in companies that, even if it's a bad market. So the main two things I look for are, if people have seen my interviews before, they're going to get tired of this. It's people and share structure. People being, what have they done before? Have they made a discovery? Have they made shareholders money? Uh, what's their track record? What's their reputation? I'm at a point where I've retired a couple times in this business. I don't want to work with anyone that I don't want to go on vacation with. So, and there's a lot of people I don't want to go on vacation with in this business. So, people is the main thing. I got to really like the person running the company, and the rest of management, but mainly the person running it. I want to see that they've had a track record of doing the right thing in this market, which again, 80%, 90% of the people don't have that track record. So anyway, so people, and then share structure is a whole nother, you know, often when I say share structure, the immediate thing someone will say to me is, oh, you mean how many shares outstanding? Well, yes, but that's a small piece of what I mean by share structure. Most of the companies I finance, most of the companies I'm a shareholder in, they have a significant insider ownership. So management owns a significant reporting too, not just, buried in some offshore account. They have reporting ownership. So, I'd like to see a large portion of management owning the company. And then on top of that, I'd like to see other like-minded shareholders. That means, it could be people reporting over 9.9%. They're not in this to see a stock go from 25 cents to 40 cents and collect a warrant in 4 months. They're in it to build $1 billion asset. So, some of my companies that I'm involved in, have up to 70% insider reporting ownership. Doesn't mean they're going to be successful, but it means that they're not making money if they don't do the right thing. So I want to see that. So again, it's really about the other shareholders who you let in. You know, I want to see that there's some big names in that again aren't looking to make, $100,000 on their investment. They're looking to make quite a bit.
In terms of share structure, sometimes looking at that fully diluted number and seeing how many warrants or if they financed with warrants, I guess this is a double-sided question. As a speculator and investor, a warrant can be a great thing, but as somebody who also is looking for a company to sort of perform and be able to grow, sometimes those warrants can turn into a bit of an overhang. What are your thoughts in terms of like warrants? Is it super important? Is it something that you look for as an investor? Is it something you prefer a company you'd like to have as an investor, but you don't want a company to really have too many? What
Yeah,
what?
it,
Yeah. What's your
it
thought?
comes back to people again. Who owns those warrants? So yeah, I like to own warrants, but I'm a longer term shareholder. I don't sell my shares immediately and collect the warrants, which a lot of people, you can do really well in this business doing that. But I'm trying to help companies build out over a 2, 3 year period. So I want to know that again, that comes down to who you're letting be your shareholders. If you're doing some mega retail financing with 300 people coming in through brokerage firms, those you're going to have a lot of selling. It's like when you get into flow through financings too. I want to know that the people are like minded, that they tend to want to hold their shares and their warrants. So yeah, I love to get warrants, and I can dictate, because I'm writing a big check, I could require companies to give me a 5 year full warrant. I often don't do that, not because I don't like it. In some circumstances, I will do that. I've locked my stock up for a year at my own request, and everybody else in the financing, because there's a full warrant involved. I want to see the company be able to raise money at higher prices. That's good for me. I'm a shareholder. So again, it's all who you bring into your financings, and how do you go from point A to B to C and raise money at higher prices. And you don't want those warrants. And in options, again, you see some of these companies that grant, the maximum amount of options. Management doesn't own any shares. They have no money in the deal. I don't like that either. But now if somebody owns 50% of the company, like Bravo Mining, the CEO, Luis, owns 50%, and he wants to set himself some options, I'm all for it. He owns 50% fully reporting. So again, each circumstance is different.
Well said. Good points. So what you mentioned you sort of write a big check and you're invested in a few of these things. You've been through a few different cycles. Right now, today, if you had to mention it, or I'm going to ask you, approximately how many companies do you sort of own a significant piece of? Not just something where you've taken a flyer just because like a friend's asked you to, but like a core sort of like position. And do you have an idea of what investors, again, true
Usually,
speculators?
I keep that between a half dozen to a dozen companies. At this point, I probably have more than a dozen companies that I'm a significant shareholder in, mainly because I think this is a very big bull market. Again, it's a piece of my pie, my financial pie that's in these companies. Your listeners should know you're not putting your whole pie into the junior resource market. It's a good way to end up with a piece of pie. So, but again, significant amount of money where I own anywhere from probably on the low end 4% to 9% of a company. But again, this is a market I think that longer term is a good to be a little overexposed in the junior resource space. So
In terms of the sweet spot, where do you typically get involved? What would be like a market cap? Is there a standard market cap, or is it like you said, people and structure and the value?
it's people and structure, but I tend to be more beneficial with companies as a shareholder and consulting for them when anywhere from a $5 million to a $40 million market cap. My goal is to help companies advance their projects, be a good shareholder, give them some good advice on raising capital in the future, and hopefully they graduate to a 200 to $500 million market cap because they've advanced their assets to that stage. And there's another level of institutional investors and other people that come in at that point that want to see it advance to a billion, $2 billion market cap. So typically, I'm on the front end of the curve, the higher risk, and again, it comes down to none of these companies are making money; they got to raise capital. So if they're raising it from the wrong shareholders, then they're on a vicious treadmill where they're dealing with warrants and everything else. So that's really what I try to offer is that, hey, you're not on that treadmill. You're going to have a little bit of time, but you need to advance from point A to B to C, and that needs to be clearly defined. Sometimes you can have everything right and it doesn't work. That's just the nature of the business.
In terms of right now, what commodities have you most interested right now?
Well, commodity prices are, copper's up, uranium's doing better than it was 5 years ago. Gold's up, obviously. Most of the junior resource, especially on my end of the curve, don't have a resource. They don't have they don't, again, even at $3,000 gold, if you make a high grade gold discovery, new discovery, you're going to do really well. And gold's much higher than that right now. So, you know, I, again, people in share structure, there, I'm interested in any commodity if I think the asset can be developed or be explored into a meaningful asset. So, but gold, copper, uranium,
Okay.
some of the specialty metals. Again, I was in the first what I call the first rare earth boom. I financed all those companies. I'm a big believer in security of supply and not a believer in the government making good decisions. So, we'll see where it goes this time. They seem to be realizing that we can't depend on foreign nations that aren't friendly to us for our mineral supply.
Yeah, we hear often about it, supply chain, supply chain, supply chain. Globalization was a really interesting thing. But of course, when we've had these geopolitical or other issues, supply chains, I think, have been shown to be fairly weak and not very resilient. So I guess this reshoring, onshoring sort of strategy, and then being a master of your own destiny by actually stockpiling and having stockpiles of commodities has become super important. I guess something just get your sort of opinion on. We're going to talk a little bit about it in a few minutes, but I'm gonna say these two letters, AI. AI is sort of, you kind of alluded to it earlier on the podcast. The technology sectors just seen a massive boom, and obviously, if you look at like the Mag Sevens and things like that, a lot of it's sort of related to AI. If you look at some of the really poor performers on the technology side, like software, SaaS, it's because of threats of AI, infringing upon their sort of business as usual. What do you think in terms of like, is there a strong, real correlation between this AI sort of race and build out and the commodities, or is it something that promoters are going to stick on a fact sheet and a corporate presentation to sound good?
No, there's a very real correlation. I mean, building these data centers, I mean, every day someone's announcing another $20 billion raise. I think Amazon today, Oracle yesterday. I don't know. I can't even keep track of all the money. But yeah, no, there's an absolute correlation like anything else. You need commodities to build these things out. You need copper. You need lots of others. You need energy. You need again, if you want a base load clean energy, that's uranium, right? I mean, even the environmentalists are coming around to that. So there's definitely a correlation, and but you see a lot of the promoters in the junior resource space really hyping that up. Which again, there is a correlation, but most of these companies don't have the commodities anyway. They
Right.
don't even have the share structure of the people to run the company. So yeah, and the other side too is, and this is just my opinion. You know, I was around for the .com era, and and obviously the internet changed the world. I mean, crap, I still remember fax machines. you know, I used to have 30 employees. I had in-house legal counsel when I was, first in the natural resource business. I don't need that anymore. I got Zoom calls. So again, the internet did change the world, but there was a misallocation of capital. And that's what led to the massive Nasdaq sell-off back then. I think you're seeing a misallocation of capital again in AI. AI is going to change the world massively, and it's going to create more demand for these commodities we don't have enough of. But again, it's probably the flavor right now, and I think that will be something that gets corrected. But again, it'll take off again, and it's huge.
Right. So that's good. And you've kind of mentioned it a few times. Sometimes these companies don't have the commodity. They might be like pure explorers, greenfield type opportunities. Do you have like we can talk about a little bit about the Lassonde curve, kind of where you typically kind of come in at. Are you looking, do you typically like to come in early on a just pre-discovery sort of play, or do you like to come in when a discovery's been made? Are you more of like a brownfield sort of project guy? Maybe you could sort of walk my viewers through a little bit about you again personally, what sort of
Well, I'm on the front end of the curve. So again, when I'm talking about the market caps, the 5 to 40 million, these aren't companies that have a bankable feasibility, unless you're in a bear market, which we're not right now. These companies, but again, when you talk, pure exploration is taking a property that's never been drilled, and for reasons that you like it, and that's and you're drilling it for the first time. I typically don't necessarily do that. Most of the projects I'm involved with have had work done on them before, and that's a whole nother discussion about AI and what's gone over the last 60 years and data. But the
yeah.
bottom line is that I'm looking for something brownfields, absolutely, near a past producing mine, preferably not 1,000 years ago that the mine produced, but something in the last century. You're exploring with modern technology, and there's a reason you believe there's something bigger there. But I want to be involved in something that again would make a difference. If I'm going to take that risk, I want to be involved in something that is going to interest a mid-tier to major to buy something like that. So again, there has to be a geological reason that you think that this could be substantial.
And you kind of touched on sort of AI. Maybe we could talk a little bit about your book. Maybe we could talk about some of the deals that you sort of companies that you own right now. Where would you like to start? Maybe shall we? Why don't we start with Daura?
Daura Gold. Yeah, I'm a shareholder in Daura Gold. Mark Sumner is the CEO. I got involved with the company. I did not structure the deal. It was financed by someone else, but I got to know Mark, who's a first-class individual and just a high-integrity person. And they had a project in Peru that's completely surrounded by Highlander Silver's project, Bonita, that they had great drill results on. And Highlander Silver, again, I don't know what the market cap is now. I think it went to $1 billion, but it was a
Yeah.
couple hundred million at the time, and it was on those drill results. Since then, they've bought Bear Creek, and the founder finance guy Richard has had some big successes in the market. So I hear people telling me, oh, you can buy Daura for I don't know what the market cap is, 20, 25 million, something like that. And here's this company that you completely surround, and they were drilling like, I don't know, 70 meters off our property, hitting great drill results. It's going to extend. So, but again, I think Daura is an interesting junior, exploration company because of that project. They also ended up joint venturing a project in Argentina that they just did the first 1,800 meters of drilling in Argentina on, and they had some great initial results. All the holes had mineralization. Was there a grand slam? No, but you had a couple meters of 700 grams a ton of silver. You're in one of the biggest silver gold districts in Argentina, massive land package. So it was very successful in my opinion. So, but again, all of these companies have to advance and raise money to drill again. And I think Daura, with their, they have to get the Peruvian permits, which will probably be end of this year, to drill that project next to Highlander, but they'll be mounting another drill program in the fall in Argentina. And I think it's a great speculation to find something big.
Yeah, and I believe that Daura's got a joint venture. They've optioned a property in Argentina from another company,
Correct.
which is Latin Metals,
Yeah.
which I think
Well,
you might be a shareholder of, and they have an interesting business model. They're what we call a project generator. That's something that Rick Rule often talks about. He loves project generators. I think maybe you like that model as well. Can you explain to my listeners and viewers a little bit about what a project generator really is?
yeah, Rick Rule really likes that model. I like the model too, but again, I also like, Rick likens it to people don't like prospect generators because it's boring, and the opposite of boring is terrifying when you're drilling your own property. And he likes boring, and he's done very very well, over a 50-year
Sure.
career in prospect. Again, I think he kind of invented the whole thing. He's oil and gas, and then a lot of. Anyway, the bottom line is that I like it, but I like to be terrified too. So I finance drill hole plays too, but I have 3 or 4 project generators. And yes, Latin Metals is a company that Rick and I are both shareholders in, focused in Peru and Argentina with, a dozen plus properties and some joint ventured out, one to Daura and several others joint ventured out to others. And the model basically, instead of diluting your shareholders by, drill campaign and have to keep raising money. And again, isn't a bad thing if you have the right shareholders, as we talked about earlier with share structure. But the model is to joint venture the project out to either another junior or preferably a major that is going to spend their money to earn into the project. So you're still getting project dilution at the project level, but you're not getting shareholder dilution. They're spending their money to advance those. So I'm involved in 3 or 4 prospect generators. Again, not every prospect generator is. People like to throw it out there. We're a prospect generator. Well, the proof is in the pudding. How many projects do you have joint ventured out? And are they to a bunch of rinky dink companies that need to raise money, or are they to majors that know what they're doing?
And what other companies should we talk about? You mentioned uranium. Do you have uranium? Do you have
Well,
a
I'll mention a couple of prospect generators since we're on that subject. You talked
Sure.
about Latin Metals. There's a company called, again, I consult for these companies. I'm a large shareholder, so this is not financial advice. Do your
Sure.
due diligence. Seek out a broker who knows the resource space or a newsletter writer who's, again, got a track record. There's a lot of newsletter writers and brokers that don't have great track records. Find someone that has a good track record, to get your financial advice and how you should, if you even should participate in the junior resource market. So again, this isn't financial advice. This is just what I'm doing. And this is, what I do with my piece of the pie. So Kincora Copper is a really interesting prospect generator. Again, you brought up Rick Roll. Him and I were announced last year as the lead orders in the financing. I designed their financing. I actually restructured the company because their share count was massive. They'd been a drill hole play and they switched to the prospect generator model. So it's a very interesting company. There's only about 45 million shares outstanding now. They've joint venture with Anglo and the Macquarie Arc of Australia. Anglo's drilling constantly. I think they've spent 20 million and still looking and seem to be happy with what they're doing. It's a massive, that area of Australia has, very large copper porphyry gold mines. They're expensive to explore for, but if you find one, they're not measured in the billions, they're measured in the tens of billions of dollars. So that's ongoing. They're also drilling their own project. They're kind of a hybrid prospect generator. They've got a gold project they're drilling right now. I suspect we'll see drill results before Rick Rule's conference in July. I'm very bullish on that project. They've got, a number of other projects joint ventured out to others, and their 2 of their flagship projects aren't even joint ventured. So I'm hoping this year we'll see that. And they also just announced a sale of a non-core asset in Mongolia for 10 million US. They got the first $1.5 million payment. They're supposed to get the next 3.5 million before Rick's conference again. So you have a company that's very well cashed up, doesn't need to raise money, so they're not going to, dilute you in front. But again, they don't. They're trying to make a discovery with some big partners, and that's what you're investing in. So Kincora is interesting. And another project generator that you probably know, Caleb at Headwater Gold,
Yeah.
first class geologist, first class guy, someone I go on vacation with, would hang out with or go on a fishing trip. Works tirelessly for his shareholders. His team owns just under 30% of the fully reporting of Headwater Gold. And I should go back to Kincora. Again, they have about 30%, 25% with insiders and board members. So Headwater has 30% reporting insider ownership, a great register of shareholders. Again, since you bought Rick up in Prospect Generators, I did the financing of that and invited, Rick and I were the lead orders in that financing too that was announced, I don't know, 9 months ago. Yeah, Headwater's got projects in Nevada, Idaho, the company's joint ventured. I'm trying to remember now. Oceana got acquired by Newmont, so they're joint ventured on two projects with Newmont. They've got Centerra Gold is a large, I think 9.9% shareholder, and joint ventured on two projects. Who's the other? I'm trying to think. You caught me here. They've got four majors joint ventured. I don't
Okay.
think there's a
That's
prospect
great.
generator that's executed better. Again, they don't have the Newmont was a discovery. They're continuing to drill Springhole. But
Yeah.
again, the other three majors that are drilling, they're trying to make a discovery, but they're doing it right. And that's what I want to be in. That's a prospect generator. So Headwater Gold is a great company to do your due diligence on.
Excellent. And then and what other ones did you want to sort of talk about? Do
Well,
you
you
have?
brought up uranium. I like uranium. I'm kind of underexposed in my portfolio to uranium. I have some bigger companies, obviously, that I have, what I call my safer money, if that can be in the commodity space, but producers. But yeah, my only true uranium junior that I own a lot of is a company called North Shore Uranium. And again, it comes down to people and share structure. Blake Steele, who's on the board, I financed his company, Azarga Uranium, I don't know, probably 10 years ago, and the Dewey Burdick ISR project in South Dakota. He advanced that project and ended up selling it to Bill Sheriff's Encore Uranium or Encore Energy. I can't remember what it's
Yeah,
called.
Encore
And it was one
Energy.
of my
Yeah.
huge wins. So I have a lot of time for Blake. And when Blake said he was doing a new company called North Shore Uranium, and he had a historic resource of 10, 11 million pounds in New Mexico, and thought it was going to be ISR amenable. I had all the time in the world to write a check. So I've written two checks to him and own all my shares. And they just started drilling that project. What's the market cap of North Shore? These are all high risk. I mean,
Yeah.
trying to think, it's about 80, 20, probably under $20 million Canadian. So we're talking about $15 million US. So
Yeah.
again, it's high risk, but it's a guy who's built and sold a company before, owns 10% of the company. A couple of the other founders are ex CEOs of producing uranium companies. So these guys aren't in it they're into, hopefully, the stock's a 20, 25 cent stock. If things advance properly over the next 2 years, they sell that stock for, $2, $3 a share. That would be their
Yeah.
plan.
Well, that uranium's a really interesting space. It's one that you know seems to have its own sort of like fan club, and it's it's one of those things where and not too long later it's like, oh darn, I maybe have too much exposure to it.
Yeah.
The cycle's sort of on and off even when we're within a bull market, within the wider sort of commodity cycle. It seems this time around there's quite a few sort of roll up plays that are kind of focused in the U.S. For uranium. You mentioned Bill Sheriff. Bill Sheriff's got his Encore, which is sort of a producer, but he's involved with a couple of other smaller ones, which are now sort of rolling up and merging, and there seems to be a bit of that. Any comment to sort of uranium in the United States?
Oh, I think it's a security of supply thing again. We don't, uranium is the clean energy. China is building, I forget how many nuclear reactors right now, but it's more I think it's more this year than the entire world, or half of, it's a massive number compared to the rest of the world. And you've seen a lot of tech companies start to get into buying pieces of uranium producing, even 3 Mile Island here in the States. I can't remember if it was Amazon or who is bringing that back online to secure their AI energy needs. So
Yeah.
you're starting to see tech companies really interested in not just uranium, copper, and other things. I'm noticing that new investors coming in because they realize to do what they want to do, they have to have the energy, they have to have the copper. So yeah, I think there are roll ups. You know, you mentioned Bill Sheriff; they just spun out from Encore some of their ISR assets that are further away from producing into Videra, and Janet Sheriff, his wife, runs that, who's just a top-notch executive. So yeah, you see that, and I've had two calls in the last, I don't know, month, companies that don't know they're both talking to me. They're looking at combining it or financing, and I'm like, yeah, I feel like going, yeah, the other company's talking to me too, but again, yeah, I think you'll see that. I think uranium's a great spot to be in, and yeah.
So, a topic that we haven't sort of touched on, I see a lot. I wanted to get your opinion because you're based in the United States. However, a lot of the companies you're invested in, when we talk mining, are Canadian listed, and then they have sort of like typically it's a sort of OTC type sort of listing. But we're starting to see more companies go and apply and move and graduate to like the big board
Yeah,
in the U.S.
yeah.
Any thought on that? Do you think that the average investor that's US based and the Robinhood sort of investor, do you think that mining is one of those places that is underinvested, and do we think that we're going to see that trend sort of continue for the bigger companies that can sort of meet these listing requirements?
Absolutely. Yeah, again, that's what I did back when I first came in this business. Besides doing IR and corporate communications, we handled the 20Fs, and at the time there was the American Stock Exchange, and we'd uplist. It's even more critical now. I mean, the amount of money that flows, even though most of these companies are based in Canada, the amount of Canadian money that's in these deals is far less than the US money.
Yeah,
And having a US listing absolutely gives you more access to capital. It can bring other institutions in price wise. But you mentioned that you were a shareholder in Contango, and
yeah,
I'm not a shareholder, but I'm friends with Sean Kuhnke. I mean, I know everybody in the business, but who was Dolly Varden, and they just combined. And
yeah,
when Sean called me up and asked me, because he knew my background, and I guess some of the board members didn't know about rolling back and listing on the big board. I said, absolutely, you should do that, especially with silver. What we all think. So, and this is before silver moved, right? So,
yeah.
what we all think is going to happen, it gives you more exposure. So, absolutely. And I have a company I can't name right now, a gold company that I'm a shareholder in, that trades at, well, it was $1. I think it's 70 cents now, but it's a massive gold asset. Well, I can, Revival Gold. It's 6 million ounces of gold here in the States, two different deposits.
Wow.
They're advancing to production, run by a first class guy, Hugh Agro. And he asked me the question, what do you think about, you know, would it, down the road, would it be smart for us with the U.S. assets to, list on the big board? I said, absolutely.
Yeah, it's been really interesting to see, obviously the Amex that you talked about, that in previous cycles, that was something that was kind of done. But I guess with this NYSE sort of listing
Yep.
and sort of the NASDAQ, sort of junior listing as well, which is still a lot more senior, and everybody can sort of go and buy and creates a lot more liquidity. Certainly something that I've found to be very interesting, watching what happens here with Canadian companies that reach a certain market cap, and then obviously that's now more of a global sort of exchange. Global capital can get into
Yep.
it a lot easier than these smaller Canadian
Yeah.
listings. So appreciate that. Anything? Why don't we talk a little bit about you? You and Mark Sumner have something called Geomorphic AI. We talked a little bit about AI, and I wanted to talk to you about this Geomorphic. I'm a shareholder in Daura, and know Mark sort of mentioned the company. So why don't you give a little? Why don't you explain I think you do some business development for them, co-founder of it. Maybe you could explain a little bit about Geomorphic AI and what it's doing for the mining industry.
Yeah. The funny part, I can hear Brent Cook in the back of my head, who's a geologist and ex-newsletter writer, who always says, it's amazing that Jeff's done so well in the resource sector and he doesn't know anything about geology. The only thing I know less about than geology is technology. I still call my 20-year-old daughter to ask her how to put an app or put Venmo on my phone and all that stuff. So yeah, I am involved in Geomorphic AI. It's a couple of tech guys with AI guys that are with a very recognizable technology company full time. and Mark Sumner's involved. But what ended up happening is they talked to me about it for they've been developing it for years, but they started talking to me just from my business background, again, not the tech or the geology,
Sure. Yeah.
and and I ended up having them do a project for Kincora Copper. And Kincora Copper, we talked about earlier, is a prospect generator. And their idea with this AI company was that they could generate prospects from loads of data that's been generated over the last 100 years. And remember, if you drilled a copper hole that was 80 meters of 1% copper in the 60s, it wasn't economic. You drill that hole today, it's a discovery. So I was interested, but what really happened is I had them do a free project for Kincora. And Kincora Copper, their geologists, Sam Springs, the CEO, but their geologists are ex-Newcrest that sold to Newmont. They're accredited with making multi-billion-dollar discoveries. They're very famous geologists in Australia and technical team. So we did a project, and they came back to me and said, "This is amazing. You found data we didn't know we had. You've identified even more with this data, more drill possibilities." And again, I don't think AI replaces geologists, but it can speed things up massively. And it can also find data that's been gone for nobody knows exists, sitting in Sweden in the archives, right? So yeah, so Geomorphic AI basically is a prospect generator with a service business. The service business is helping companies either while they're drilling in the field or identify. We review projects for they're thinking about acquiring. We go through all of the data, find more data. So that's the service side of the business. But what I'm really excited about is going and finding old data, especially paper data. We're working with a couple of companies that have a lot of paper data from past mining companies that did a lot of exploration, all the trenching, soil sampling, drilling, and taking that and digitizing it. And again, some countries have some great databases too. So we've identified some very good projects. Geomorphic AI is going to joint venture those out to other companies. Like, we follow the prospect generator model and continue to do the service side of the business. But it's very exciting. But again, me and technology and geology are two things that yeah,
Sure.
I'm a
Well,
business guy.
I would imagine you've got the sort of contacts in the mining space, like with the mining companies and geologists and whatnot, to sort of bring to the table for Geomorphic with some
Yeah,
potential.
well, absolutely. That's why I'm involved in it. And again, the proof's in the pudding. We're just starting to, we've got about a dozen projects we've staked that we've identified through data. We're putting those out to companies now, and obviously I know a lot of people in the space. And if those get joint ventured out, that'll be, the first proof was working with some good, a couple good companies with good geologists and on the service side, and then being amazed. And then that's how I sort of said, wow, if they're amazed with this, I'm going to stake these projects. So yeah, if your people are interested, then go to geomorphic.ai. You can get our news. It's a private company, but you'll see our projects will be just like a public company, releasing the projects we've staked and the data rooms. And go ahead and sign up at Geomorphic AI to get the news.
Awesome. Well, that sounds like very, very exciting, very interesting. And, sounds like some really smart people coming together. You having sort of the Rolodex of everybody in the mining world. And I know, Mark's an extremely hard worker. So I'm really interested to see
Yeah,
what's
it's fun.
out of
Yeah,
that.
yeah.
Yeah. So, maybe just to kind of, we'll sort of, we've covered a lot of ground here today. Why don't we kind of wrap things up? When you're not doing all this, what's a typical day in the life look like for Jeff? And what other things do you do other than invest and try to keep straight what's going on with the dozen or so companies? What do you do for fun?
Well, I'm essentially retired, but I still work 8, 10 hours a day because I like what I do. So that's what retirement is. You're doing something you enjoy. I enjoy working with good people. I enjoy the thrill of the chase, and trying to make a difference and discover something. But I guess my hobby outside of what I enjoy working on is I like I like history in general. The house I'm here at my office is a 100-year-old house with a huge history of, and I like history, but my real passion is I love cars. I've been a car nut since I was a kid. I like the history, so I have a pretty extensive car collection of vintage cars, ranging from pre-war all the way up to muscle cars and 60s European cars. So, but I enjoy driving them. I enjoy playing
I've
around with
seen a
them.
few photos of your garage. Pretty impressive stuff, for sure. Very cool. Very
Yeah.
cool. So, outside of cutting a check, and being retired, what sort of things kind of do you do for companies? What's the sort of like value add?
Basically, I liken it, some people call it activist investor, which is like a Wall Street term. These aren't Wall Street companies. These are very small companies. So I call it parental supervision. I just, I'm a shareholder, so I want to give them advice on, whether it's joint ventures or, capital raises, how to set themselves up and sort of help them map out. If you can move from A to B, this should revalue here. And if you can move to C, you should raise money here. And again, just giving them the advice to, again, you can do everything right and have a great people, great share structure, great early stage assets. Sometimes it doesn't work out. But again, I'd like to think I've helped companies over the last 30 years get to, and I've a number of companies, even in the bear market, I was lucky enough to finance John Black's companies, Regulus and Aldebaran, or be involved in that, and with much smaller market caps. And here's a guy who's built and sold a company before, and both of these companies have graduated to much bigger market caps. Bravo Mining, that's what I like to see that, and and I'm still very supportive of those companies, even if I'm not as large a shareholder anymore. So
Awesome. Well, what's the next? Do you bother attending conferences anymore? And if you do, what's like? What are a couple of conferences that investors that are speculators in the resource space should be attending?
I still attend conferences, but I kind of liken it to a high school reunion. I've been around so long, it's actually fun. I have friends in San Diego that aren't in this business, and they always ask me, "Why do you still work? Why are you traveling to a conference?" Well, it's like going to a giant party. It's fun. I know everybody. So, and it's also, again, with technology and stuff, it's still good to be face to face with someone and look them in the eye when you're talking about a deal. So, yeah, I like there's a number of good conferences, but the Vancouver Resource Investment Conference in January is one I go to every year. Beaver Creek in September in Colorado is more of a industry company, retail investor, not so much, but it's a great conference for me. Rick Rule's conference is coming up here beginning of July. It's sold out, but you can still sign up online to see all this stuff. That's a great retail conference. All the companies are vetted by Rick. But again, I don't look at it as a work conference. I'm looking forward to it. I can't wait to go. So Brian London runs the New Orleans Investment Conference. That's in October, right before Halloween, I believe. And that's a great retail for smaller investors to meet companies. Always a fun conference, and you can learn a lot. There are good speakers, So what else? Yeah, the CME conferences. I go to the one in Scottsdale. That's a good conference. But again, I go partly because business, it's good, but it's also I know everybody and it's fun.
Excellent. Well, Jeff, I really appreciate your time. That's been very informative. We've done about 50 minutes, top to bottom, kind of covered who you are, a little bit about the cycles, some cycles that you've been in, this one, and then covered some companies. So I really appreciate the time. I'll let you get on with enjoying the rest of your day, and hope you'll come back.
I don't know who's going to listen to me for 50 minutes, but hopefully someone gets something out of this if they listen to it.